Also this week, I was joined by Iowa State University Livestock Economist Dr. Schulz. The coronavirus outbreak has added instability to this sector of ag as well. He joined me to talk about that, and I began by asking how cattle producers and cattle packers are responding to the crisis.
It's really important to put this into context that we're very much in uncharted territory. So we expect significant gyrations in prices as the market is attempting to find a market clearing price. Now we know that futures markets and to some degree cash markets, they overreact. What they're trying to do is anticipate those prices. And in doing so, they may overreact to that. So I want to kind of break down some of those prices when we look across the beef supply chain. And so, I think it's important to note that the cutout value has been very strong, really depending on what metrics you look at. If you compare year over year, the cutout is 7% higher than a year ago. If you look at the last 4 weeks, that cutout has gained 17%. But when you dig into the data, it's really important to understand where that increase has come from. And it's predominantly come from the chuck and the round, which are the major ingredients into ground beef. So as we've seen consumers transition from eating away from home to very much in their homes now, we've seen that very strong demand for ground beef, and that's been driving a lot larger cutout values. Now, where we see the cattle price, and I think where we've seen the biggest reaction is, yes, major gyrations, but also we've seen those prices erode significantly over the last several months, and especially when we look over the last several weeks. And so that's created a bit of a mismatch between what box beef prices are and what cattle prices are. I would importantly highlight, though, that cattle are sold a variety of different ways. And we've seen that, over the course of just, if I look at 2 weeks ago, prices, they range from about 108 per hundredweight for negotiated cattle here in Iowa, all the way up to, for forward contract, $124 per hundredweight. So that does show that there's still significant variation in cattle prices being reported. And so sometimes if we note, what the lowest price is, that's going to show a much bigger mismatch between box beef than what, some of the highest prices being sold for. We have seen the market obviously pick up. If I look at the last 2 weeks here and the week ending 3/29 here in Iowa, negotiated prices were just south of 119 per hundredweight.
And Lee, real quick on pork, what are the strains this outbreak has put on those markets?
It's very much been similar to, as we look across the livestock industry, lower prices are being faced by producers. And that's, been a significant challenge. Now, I think when you look at the pork industry, they rely on a very large and skilled labor supply. This was already challenged as we looked at unemployment rates and the growth we've seen in the hog industry. And this even potentially could cause a bigger issue there. When you look at the way the hog operation, hog industry operates, it's a very well-oiled, fine-tuned machine, right? And when it's operating normally, it's a very efficient way of doing business. But if we put some kinks in this, I think that really does impact the pork industry, and we could see long-lasting impacts beyond just the price impacts that we're seeing today.
Are there any sectors within the livestock industry that are better prepared to handle this period of instability, or maybe areas that won't be impacted as much?
I think there's really two ways to kind of look at this. First, biology really prevents livestock producers to responding to price changes. And so when you look at the timeline for production from farm to retail, this really ranges from 2 months for poultry to 2 years for beef production. And so given that, I think you're seeing producers not able to really respond to these lower prices, even though they may want to, given what the profitability outlook potentially is. Now, we're dealing with large production, and that's going to continue regardless. You really can't stop that production, and so we expect that record production in 2020. But the second way to, I think, look at this, and this maybe more benefits the beef industry, is there's some flexibility in the way of doing business. This is very dependent on resources and management. But if you look at the cow-calf operation, now while we expect lower prices in the fall when most of those calves will be marketed, we haven't got there yet. So the time is on the side of the cow-calf producer. Also, cow-calf producers have potential for retained ownership or potentially weaning early. So there's some flexibility, I think, in that production and marketing that does benefit the cattle producer. Now, this is obviously very dependent on finances, cash flow, has potential tax implications, and all of those issues. But I think overall, you could look at different sectors, I think, may be able to weather this a little bit better than others, given different aspects of their production.
And we haven't really even talked about exports for beef and pork. Any guesses as to the impacts we'll see here?
Sure. So I think when you look at exports, they were close to, if not record strong, to start 2020. Now, I think when you look at the weekly data, it still shows that exports have remained fairly strong. And that's really due to I think, a lot of the trade deals and momentum we've had the last couple of years, and also shows really the ability of both producers of the meat products and consumers to adjust in this marketplace. So even though we're all under movement restrictions and guidelines, we're still able to consume the products that we desire. And the export data, I think even when you look at the domestic data, really bores that out, that we're still consuming these products. It's maybe a little bit more of a challenge to get it there, but we're still seeing relatively strong demand.
And finally, Lee, this can be for beef or pork producers. Any marketing or risk management decisions you want to leave us with today that you haven't talked about?
I heard a great comment from a fellow livestock economist, Darryl Peel, out of Oklahoma State. And well, his comment was, we need to think about how to keep this a bad year rather than the last year. And so that goes to all what we talked about of possibly making some changes, production changes to your operation to be a little bit flexible. Understanding that a lot of the typical price risk management strategies that we have in our toolbox have long left us in this current marketplace, but there still might be some when we look at deferred markets, and we might have to dig deep of looking at potentially selling futures and buying a call, kind of a synthetic put to allow for that higher base price, but still allow for some upside in the market. I think an important thing I want to highlight as we end here is it's very important that we don't back up this supply. And so what the issue there is, I think, while this system we've maintained that continuity of business, I think there's some potential there that we could see some slowing. And it's very important to remain current in our marketing. So, there's been some questions about should we delay some of these marketings, add some days on feed, increase weights. Now, depending on how the markets shake out, that could benefit the individual producer. When we look at the industry as a whole, we need to keep this supply really moving through the chain.